Musk announcing on X that XAI has acquired X in an all-stock transaction.
Elon Musk's XAI has now acquired X in an all-stock transaction.
Elon Musk has once again outsmarted himself. His latest financial stunt doesn't just raise eyebrows, it shocks even the most seasoned observers. The company XAI, owned by Musk and specializing in artificial intelligence development, acquired Platform X, formerly Twitter, also owned by Musk, for $45 billion, entirely in shares. Yes, you heard that right. Musk sold Twitter to himself. This deal is not just another episode of a billionaire's eccentric behavior. It is the quintessence of financial postmodernism. What's happening can hardly be called business in the classical sense. It's more like a virtuoso performance in which the same person is simultaneously the seller, the buyer, and the front-row spectator. But the strangest part is the numbers. As part of the deal, X Twitter is valued at $33 billion. That's $11 billion less than what Musk paid for Twitter in 2022. In other words, 1/3 of its value simply vanished. Meanwhile, XAI, which he founded only 2 years ago and whose main product, Grok, is a rather weak parody of ChatGPT with a taste for provocative humor, suddenly received a valuation of $80 billion. How? Why? And who even did the math? XAI is essentially an empty shell with a single product in Musk's loud name. It recently raised $6 billion with a valuation at the time of $40 to $50 billion. Within a few weeks, according to Musk himself, its value suddenly nearly doubled. With no new technologies, no revenue growth, no breakthroughs, simply because of a merger with another one of his own companies. In the world of ordinary people, this is called financial fraud. In the world of billionaires, innovation. For Musk, this deal has clear advantages. Twitter, now X, is a loss-making asset with $12 billion in debt. That financial hole is now partially shifted onto XAI's balance sheet. Thanks to the inflated valuation of the startup, the debt gets diluted and becomes less toxic. Moreover, the unprofitable Twitter can now gain access to the capital raised by XAI. Technically legal, but morally questionable. This is the financial alchemy of the ultra-capitalist era, turning a devalued Twitter into a golden asset on paper without investing a single cent of actual money. But behind the elegant words lies a grim reality. Musk is using user data from X to train AI models, and he's doing it without their informed consent. The platform's user agreements were quietly updated. Now, Twitter X officially states that it can use all available information, including public posts, private message conversations, and even behavioral data for AI model training. This is perhaps one of the most alarming consequences of the entire story, because at stake is not just messaging, but the very concept of digital privacy. European regulators have already sounded the alarm. Official complaints have been filed for violations of GDPR norms. Legally, Musk finds loopholes. Ethics, transparency, concern for users? In the era of corporate empires, these seem to be obsolete questions. Meanwhile, X's financial reporting for 2024 was not even audited, and the report for 2023 failed to meet generally accepted standards. If X were a public company, the U.S. Securities and Exchange Commission, SEC, would have immediately launched an investigation. But in Musk's private empire, laws operate differently. At the same time, X continues to sue advertising coalitions that refuse to place ads in response to Musk's provocative statements, including anti-Semitic remarks and the promotion of conspiracy theories. It sues under antitrust legislation. In other words, it is attempting to force brands to pay for advertising on a platform they voluntarily left. This strategy is indeed bold, and if its goal is to intimidate the market, then to some extent it is working. After all, Musk has a direct channel to Donald Trump and influence in the area of reforming the civil service. He is becoming not only a technological oligarch, but a political instrument. Meanwhile, Platform X's debt obligations exceed $1.2 billion annually. That's more than $100 million in monthly interest payments. It's not hard to guess why Musk is urgently seeking a lifeline. But what will that lifeline look like for the average user? Your data becomes fuel for AI without your knowledge. The newsfeed is increasingly filled with low-grade content designed to provoke and engage. The social network you once knew is disappearing. It is becoming a tool for the financial and political manipulation of a single person. And now the most absurd part. Critics warned Musk back in 2022 that he was overpaying for Twitter. At the time, the deal was valued at $44 billion. Now, he himself values the asset at $33 billion. In other words, he admitted he was wrong. But instead of taking an $11 billion loss, he created a paper profit by shifting debt and devalued assets into another of his own companies. In late capitalism, such schemes have become the norm. Business is no longer about creating value. It's about moving money and controlling data. The user is not a client but a resource. The law is an obstacle. And $1 billion. Just an abstract number. Elon Musk is playing Monopoly. Except instead of plastic tokens, he has real corporations, real billions, and your personal data. The only question is whether regulators will finally say enough, or whether Musk will continue to live in a world where rules are written for everyone, except him.